As of right now, Thursday, April 30, 2026, the market is open and the NUBURU stock price is sitting at 26.5 cents, reflecting a significant intraday drop of 12.02% during this session. This sharp move lower comes on the heels of a volatile week for the small-cap blue laser specialist, highlighting a massive disconnect between the aggressive fundamental expansion the company is announcing and the immediate technical pressure the ticker is facing. While the headline figure of a double-digit decline might suggest a company in freefall, the reality underneath the surface is far more complex. We are seeing a high-stakes transition where a former industrial laser company is essentially rebuilding itself as a dual-use defense and security powerhouse. The immediate insight most traders are missing is that this recent price action is likely a reaction to the massive restructuring and preferred equity shifts rather than a failure of the core tech. The curiosity loop here is simple. Why would a company with a $6 million confirmed pipeline and a strategic foothold in the counter-drone market be trading at pennies? The answer lies in the expectation versus reality friction involving their balance sheet and the heavy dilution that often accompanies these microcap transformations. Most investors looking at NUBURU stock today see a penny stock struggling to maintain its footing after a reverse split and a public offering earlier this year. The common belief is that the company is just another cash-burning tech firm fighting for survival. However, I want to challenge that take by looking at the institutional and insider moves that occurred just days ago. Co-CEO Alessandro Zamboni recently disclosed a significant increase in his indirect ownership, adding roughly $1.5 million in stock to his position. This isn't the behavior of an executive who expects the company to fold. It is the behavior of someone betting on the reality of the defense contracts. If you look at the trading volume, which has recently spiked to over 31 million shares in a single session, it is clear that the smart money is starting to pay attention to the massive total addressable market NUBURU is now targeting. While the general narrative is one of risk and instability, the reality is a business that just activated a major production ramp for 40 high-power blue laser systems for agritech and defense applications. This creates a fascinating tension for those using platforms like the Robinhood app or interactive brokers trading tools as they try to decide if this is a bottom or a trap. The daily swings we are witnessing are often fueled by the contrast between positive news releases and the overhang of the $12 million public offering that closed in February. For instance, when the company announced its Maddox Defense joint venture had entered the funded prototype phase for a mobile drone manufacturing container, the stock saw a brief pop before being sold off. This is typical of the sell the news psychology prevalent in high volatility equities. Institutional activity has been cautious, but the entry into the Asia-Pacific defense market with a $250,000 order for laser dazzlers shows that the revenue activation is real. These aren't just press release promises anymore. These are billable milestones. For those of you managing your own portfolios through Fidelity Brokerage or SoFi Invest, seeing a 12% drop today might feel like a reason to look away, but the volume suggests a transfer of shares from exhausted retail holders to more strategic accumulators. Comment below how many shares of NUBURU you currently hold, or if you think the shift toward defense techs is enough to save this valuation. When we break down what this company actually does, we find that the core business model is centered on 450-nanometer blue laser technology. Unlike traditional infrared lasers, blue light is absorbed much more efficiently by materials like copper, gold, and aluminum. This gives them a massive advantage in additive manufacturing and welding for the EV and renewable energy sectors. However, the pivot they've made in 2026 is toward directed energy. They are taking that same blue laser tech and mounting it on mobile platforms to literally dazzle or disable drones. With the global counter-UAS market projected to exceed $20 billion, the expectation was that NUBURU would remain a small industrial player. The reality is that they are now part of a transatlantic defense manufacturing venture with facilities in Houston that can scale to meet government demands. They are essentially using their industrial validation in agritech to prove the reliability of the hardware before moving it into the high-stakes world of military electronics. It's a calculated move that allows them to generate revenue in the short term while chasing the massive government contracts that could redefine the company's future. Looking at the broader market, investors often compare these small-cap plays to the giants like Nvidia stock or Apple stock, but that's the wrong lens. NUBURU is a spec play that fits more into the high-risk, high-reward bucket you might find in a Schwab Intelligent Portfolio's aggressive tier or a self-investing strategy on the Robinhood trading platform. The macroeconomic pressures of high interest rates have made it difficult for companies with going concern qualifications to find cheap capital, which explains why NUBURU had to restructure its preferred equity to eliminate over $8 million in liabilities. This balance sheet cleanup is a necessary evil. It hurts in the short term because of the dilution, but it's the only way to reach the goal of positive shareholders' equity by the second quarter of 2026. The market market is currently pricing in the fear of the past, while management is trying to sell the potential of the future. This is where the tension lives. If they hit their targets for the Tecne acquisition and the Italian government gives the green light under the Golden Power framework, the current price under 30 cents will look like a historical anomaly. The future outlook for this stock is entirely dependent on execution. The catalysts are clearly defined: the demonstration of the Maddox defense prototype to the US government and the closing of the Tecne deal. If those two things happen, the reality will finally catch up to the expectation of a defense-integrated platform. However, the risks are just as clear. Any delay in the production ramp or a failure to reach positive equity could lead to further capital raises. This is why tools like SoFi Active Investing or the Fidelity mobile app are essential for tracking the minute-by-minute changes in sentiment. You have to be able to move fast in these types of stocks because the spread between a win and a loss is razor thin. It's not just about the technology being revolutionary in a lab. It's about whether that technology can be turned into a repeatable, profitable business model in a brutal market environment. The tension between the $6 million pipeline and the $42 million market cap suggests that the market is still skeptical, but the heavy insider buying tells a different story. As we move through the rest of 2026, the theme for this company will be validation. Every shipment of those 40 high-power systems and every new defense order is a brick in the wall they are building to protect against the volatility of the penny stock world. While the intraday move of minus 12% today is a gut punch for current holders, it represents the ongoing battle between the short-term traders and the long-term strategic vision. For those using Interactive Brokers' fees to their advantage by trading high-volume blocks, the volatility is the opportunity. For the long-term holder, the authority of the company rests on those 10K filings and the progress toward the $100 million revenue target they've set for their integrated defense platform. You have to look past the ticker sometimes to see the industrial infrastructure being built in places like Houston and Italy. The narrative of a struggling laser company is old. The reality of a growing defense contractor is what's being written right now. To summarize the situation, the intraday price of 26.5 cents is a reflection of the market's current digestive process regarding past dilution and future uncertainty. We've seen a clear contrast where expectations were set by the going concern warnings in the 2025 filings, but the reality has been a series of aggressive wins in the defense and agritech sectors. The company has successfully restructured its debt, cleared out millions in preferred liabilities, and has its leadership putting their own capital on the line. Whether you are looking at this through SoFi trading platform or checking your Fidelity IRAs, the central insight is that NUBURU is no longer just a research project. It is an operational entity with a global manufacturing footprint and a direct line into some of the most critical defense needs of the decade. The expectation is that small caps will continue to struggle, but the reality of NUBURU's specific niche in blue laser-directed energy might just provide the escape velocity needed to break out of this range. Keep a close eye on the Q2 equity reports, as that will be the definitive moment that proves whether this turnaround has the legs to go the distance or if it will remain a battleground for speculators. The depth of the transformation is there. Now we just need to see the market acknowledge it. For anyone serious about online investing, this is a case study in how a company can completely change its identity while the stock price is still looking in the rearview mirror. Stay focused on the milestones, not just the daily noise. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.